Hey everyone, it's Mike Valtos and welcome to the Orderflows market analysis for Thursday, September 14, 2017. The Dow closed at another record. It was up 0.2% to 22,203, I believe. But the big news was after the market closed, there was another missile launch by North Korea. Now the markets did sell off, but it's important to note traders aren't getting as excited. I hate to use the term excited, but they're not reacting the way they were reacting a few weeks ago, thinking we're on the brink of war. I mean, consider the Japanese yen. It's a very, very liquid contract, and people view the yen as a safe haven in times of geopolitical or financial stress. So, and especially that's a contract that's going to be very sensitive to any reaction to North Korea. So what happened is the market soared. The currency soared about 0.5% against the dollar within a minute of news coming out that North Korea had launched another missile towards Japan. But within 3 minutes later, 2/3 of that advance had evaporated. And later, a couple hours later, it was barely unchanged from where it closed during New York session. So the people that are reacting to this news are the retail traders, the dealers, and the banks. The bank traders, the forex, they're sort of I say discounting it, but they are not reacting the way they were reacting a few weeks ago, because they realize what North Korea is doing, that we're not going to be sitting on a World War III just yet, thank goodness. So anyway, a brief disclaimer before we get started. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Tools we use in this presentation are the Orderflows Trader, the Delta Scalper, and the Price Rejector. Now, these indicators, these all run on NinjaTrader. They run on NinjaTrader 7, NinjaTrader 8. Yesterday I posted a video on NinjaTrader 8, and as luck would have it, bad luck would have it, I guess is more of the descriptive term. In typical NinjaTrader fashion, I got after I installed everything on my computer, Microsoft decided, hey, what, we want to do an upgrade of whatever software was sitting on my computer. So I went in there and did a series of Windows upgrades, and of course that is giving me a pain in the butt with NinjaTrader. So it's unfortunate. I did get an error yesterday as I was trying to launch NinjaTrader 8. I mean, it launched, it worked, but it was darn slow. Then in the end, I just sort of gave up and went back to NinjaTrader 7. I just want to get you a picture of this error here. It's one I haven't seen before, but anyway, we're trying to work it out here. Unable to connect to database. The CRT binary present in application bin folder is not signed and can be a potential security risk. Although I did add another indicator, another vendor's indicator on there that I had like to look at sometimes. And honestly, since I added that, that's when that happened. But so I may have to just take that one out and give it a try. So today's presentation will be on NinjaTrader 7 until I could be sure I got everything really worked out. Now, okay, so again, I was talking about Japanese yen. Now, if you're trading euro currencies, or CME currencies rather, you should be in the December contract. I haven't changed. The volume now is definitely in the December. It's switched. Volume and open interest. Open interest is really what you got to watch. And it was switching on Wednesday, but the volume in the futures was still in the in the September yesterday. But just really quick, show you the yen. This is what happened in the yen. So we closed here at was at 90.70. Boom, missile launch here. We shoot up to 91, 91.27. Then we just give it all back really quick. These are, this is what retail traders, this is how they lose money. They react to these things rather than analyze what's going on. Oh, North Korea launched a missile we better just pile into the yen. And you can see right now, where are we trading? What time is it? It's 1:15 Chicago time, and look, we're trading well below yesterday's close, 90.45. So not only did we give it back right after that move, but we've just been trading down, down, down. Now, speaking of the yen, there was some interesting order flow analysis in the yen yesterday. Let me get my yen chart up. I believe it was in the yen. Okay, so early morning, not early morning, but just before 8 o'clock, you have a new high here. You got your ratio, 0.60. You've got a divergence. You got the negative delta. You got the delta scalper. You got point of control right up here near the high. Now, this is a setup that I talk about. I don't say even call it a setup. This is, what's the proper term? I hate to use the term setup, but this appears in the market almost every day. Not necessarily this market, maybe in the Japanese yen today, British pound, euro currency, the next day it's still in some of these markets, but not everything. I mean, it's nice to see them in every single market every day, but sometimes they don't appear in a market for, a day or so, but that's just the market. You don't get the textbook examples every day, but this is the beautiful one here. This is at 7:55. You got everything lining up here. The only thing you don't have is a bunch of selling imbalances in this bar. A nice stacked imbalance would make it look a lot nicer, but you're coming up into this high. You got some relatively small deltas, 12, 25, 8, 29. Boom, you hit the new high. Strong selling, minus 116. You still got selling in the next bar, minus 65. I'd love to see a stronger negative delta, honestly, here. But the market's moving pretty quick, so there's not a lot of volume going through. And we're just heading down, down, down. From at this point, it's 90.60, and we just keep trading down, down, down. Here you got the delta scalper giving you a buy back here at 38. So from 60 down to 40, then you just sort of go sideways. You hit this low down here at 8:30, and you start railing up. This. There is a reason in here to be buying here. You got that imbalance point of control towards the bottom, but I like clearer signals, clearer signs. Here you have the price rejector giving you a sell signal. We had just rallied up from this low, coming back up here to the 50 area. You get up to 49. You're seeing some signs of price rejection, which is bearish. And what happens is we can't get past this. We come back up within a tick of it here. You got the single print. And then you just sort of hang around. You test it again. Got another 3 lots traded there. Here you had the delta scalper giving you a buy. Okay, but then you run up into price rejection. So, if this one would have stopped you out, honestly, I don't think it would be enough time for you to get out of this, before it stops you out, because your stop would just be below this area here. Then what do you got? You got the delta scalper giving you a sell. You're sitting here at 90.40, and boom, what happens is we sell off down into the 90.30s. We get down here, by this time, right, you're trading 90.34, 35 in here. So, you're short from 40. This trade's in half ticks. So it's actually, from 40 down to 35 is 10 ticks. You get this was interesting. You got this stack selling imbalance here, but then you run into this bar with point of control right on the bottom, which is a bullish sign. You also have a bullish ratio. And what happens is the market shoots right back up. Now, I had talked about when you see stacked imbalances, which, in this case it's a stacked selling imbalance, but you come right back with a bullish ratio here in the next bar after your stacked imbalance. It's not going to be very effective. And you can see it traded back up here and then sold off. But, by this point here, the whole stacked selling imbalance is falling apart. The whole argument for it. You're looking at bullish ratio, bullish ratio. You shouldn't be long still, or sorry, short up here, taking all that heat. Yeah, you can get back in down here. You've got the bearish ratio here. You got the price rejector. You got the single print, and you start to sell off. But when you have a stacked selling imbalance and you come right back with a bullish ratio in the next bar, it's not going to be very effective as a trade. Just as if you had a stacked buying imbalance and you had a bearish ratio in the next bar, it's also not going to be very encouraging as a trade. So you sell off from this price rejector down here to this price rejector, 90.30. You got some areas in here to be buying around 34, and what happens? Boom, you just shoot straight up, 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 up. Here, this is what I'm talking about. Okay, so you go from 30 up to 50. Okay, And, so that's another 20 ticks there with the price rejector. But look at this. What do you have here? You have a stack buying imbalance followed by a stack selling imbalance. Okay. But more importantly, what do you got? You've got a stack buying imbalance. The next bar, you've got the bearish ratio. Just as, just here, right, what I was explaining, I think it was, where was it here? You have the stack selling imbalance and you got the bullish ratio right here. Here, you have the opposite. You have the stack buying imbalance with the bearish ratio. And what happens? Nothing. It just sort of goes sideways and eventually sells off. And again, it would have stopped you out, but you could recognize that it's happening in here even before you see the stack selling imbalance. Obviously, having a stack buying imbalance followed by a stack selling imbalance is not a good thing if you're long. If the best thing to do is go with the direction of the next stacked imbalance, in this case, be short, or do nothing. Get out, take your loss, and wait for something else. But honestly, I do find these to be, these overlapping imbalances to be quite nice trade setups. You do come back up here before you sell off. Wasn't really the greatest trading opportunity, but then you're coming into 2 o'clock, and that was it. I don't want to talk about after 3 o'clock in the end. Really, after 2 o'clock, you shouldn't really be trading the currencies. That's when the trading books are closed at the bank, so liquidity does get a little bit less. Just really quick, this is the what is this? This is the E-minis. I just want to show you the reaction to the Korean missile launch. Earlier in the day at 6 in the morning, you had a nice sell here. These sells failed, but late in the day, again, I'm not one that's going to advocate, say, hey, you get short 10 minutes before the close, 20 minutes before the close, and hold it into the next session. But this is what happened to the market. Look at it. It reopened. We sold off from, what is that, 94 all the way down to 88. Now, again, it looks dramatic on this chart. I mean, it's like almost, yesterday's range pretty much. This is yesterday's high is 96. Yesterday's lows was at 87.5. And we just sold off immediately from 94 down to 87, more or less, 87.25, I think it was. In the first 10 minutes, the first 5 minutes actually. So that's our low. And we've just been creeping back up, and where are we now at before the European Open is 91.75. So we've rejected that sell-off, and then the market's recovered. I mean, I don't say recovered. Obviously, if we were trading up at new highs, I'd say we fully recovered. But it got it back. The move is wasn't as I say. The market is not reacting. They're calling. I guess you would say the market's calling Kim's bluff, so to speak. Okay, so anyway, let's take a look at one or two other markets really quick. Just give me a sec. Okay, just really quick, in the euro currency, I wanted to show you this. This is what I call the point of control on the extreme here. It's on the top of the bar. You got the bearish ratio, which is also nice. Next bar, you got the delta scalper kicking in, so it's changing. Selling is starting to come in here. So up here you have some resistance. Now again, this is the September contract. December, again, this is already, you had some numbers coming out early, so the market's moving pretty quick. But still, when you get bars like this, watch it and watch how the market reacts to it. What do we do? We're trading the next bar at 03 down in here in this bar, and you sell off from 03 all the way down here into where you got the next delta scalper buy around the 91 area. So that's, again, it trades, that's about 20 ticks right there. It trades in half ticks, so that was a nice trade. All right, so this is the bonds this morning here. So again, you had numbers coming out at 7:30. I had a very quiet morning coming into the numbers. So after the number, again, I can say, yeah, you have the price rejector here right on the low giving you a buy. You've got a divergence, you got a ratio on the next bar, and the market rallies up into the high. But again, that's I can easily say that, I can claim that, say, hey, look, I'm a genius, but I don't trade with around these numbers. I give the market a chance to relax. So from 7:30 to 7:35, I signals that I see are generally with a grain of salt. However, later, after we hit this high, you have the delta scalper up here giving you a sell. But look what you got here. You have you have a point of control on the extreme. It's on the bottom of the green bar. You do have a bullish ratio as well. So even though you got the delta scalper giving you a bearish sign, it comes right back with a bullish sign. You hit your new high up here. This actually is the Voltos U-turn. It's hard to see that arrow there. Then the next bar, delta scalper. Okay, so you're at your high, you got the Delta Scalper. So even if you took this trade here earlier, you got stopped out, or maybe you read what was happening in here and you got out at a small loss before it stops you out. Again, you got your second chance in here and another trading opportunity. Don't give up that just because it, you took a loss. Don't say, trading sucks. I mean, it's a process, right? You're gonna have winners, you're gonna have losers. You got to keep going, keep plugging away at it. And then the next trade, you're talking 10 minutes later, 12 minutes later. This is 7:49. This is 8:01. You'll be getting short here around 155 even. It makes a nice move. It makes a nice move all the way down into 154.24 area before it just sort of stabilizes right around the unchanged level here, or the opening price rather, at 29. The other nice thing was up here on this high. I always like how you get shifts in delta like this. And from a nice strong positive to a neutral one to a strong negative. I always treat that as a nice sign. Even in here, that's why I was sort of looking for the bit of a sell-off. But this bar here earlier is a doji. It's actually kind of a bearish bar, candlestick wise and delta wise. I mean, it was positive 1470, ended up only at 270, but at no point did it ever get negative. Then you had the strong selling in here. This was just a false start. There was just a little bit of buying left over. Then the market popped up, But then it just sort of literally hung around this level for the rest of the session pretty much. We did get a bit of a pop up, during the Asian session, but not much. I mean, usually you'd see a bigger jump in the bonds, but you didn't see it today with the Korean missile launch. All right, so S&P is really quick. Very quiet morning coming into the U.S. hours. You had a high of 94 3/4. Your low was like 91 3/4, so about a 3-point range. As you're coming into the New York session, we start trending a bit lower. The number came out. We hit some new lows. Down here, you do have the divergence, but you got it with the bearish ratio, then the bullish ratio, and then, of course, then the market rallies. It's just unfortunate that you had this one bar here. If you could slide this bar here, you would, then you could claim a ratio and divergence. But having this one bar in between doesn't help the argument. You got up here just before 9 o'clock. You got the price rejector and Delta Scalper. Unfortunately, the market just went sideways on you. That didn't work out. I said at this point, your high is still 94 3/4. Your low is 87.5. So still a tight range. But if you're getting up here near the high, I'm curious to see if we could break out. And you start getting the price rejector here. You don't sell off. Still got positive delta. Still got positive delta here. With when I'm getting short on something, I also ideally ideally I like to see negative delta if I'm really looking to get short. Like here, you got the price rejector and Delta Scalper. You got negative delta. Here you got positive delta with price rejector. If I'm looking for price to be rejected, I want to see selling come in, and I'm going to be looking at the delta for the confirmation. But anyway, you get up here to this new high at 10 o'clock. You got your divergence, no ratio, point of control up near the top. You got your ratio in the next bar, and then you can see, did the market sell off? Not really. It just went sideways. Unfortunately, it was a quiet day. I mean, what can you do? If you're getting short somewhere here, so you're getting short at 94.5. What did it do? It sold off to 2 3/4. Eventually, it got down to almost to 2.5. But again, by that time, from 10 o'clock until 1 o'clock, honestly, if I'm short here at 10:41 and it's 11:40 and it's just sort of hanging around here, I just rather take whatever I can get out of the trade and be done with it. It was a bit quiet. And then obviously later in the session, the market sold off when it reopened with on the Korean stuff. Just really quick, it's just easier to show you on this chart. This is a bar chart of the British pound 8 range in the Delta Scalper this morning. There were some nice signals. Just I don't want to make it. That's too hard to see, but just go back here. So the first signal, you got a buy down here, then a sell that fails, another sell that fails, another nice buy here from what is that, the 30 area, all the way up to around close to this area up here, 133 even, rather, up to 133.30. It looks small, looks like a small move, but it's actually quite a nice move from here up to here, because the British pound had a nice trading range yesterday. So 133, this area up to 133.30. You got to sell here. It did sell off a little bit before it came back and sort of took you out. Then here you got a nice little sell again from 50, got all the way down to 30. So another nice little sell here, a nice buy here, another nice buy here going into the close. So that's that was the Delta Scalper. Again, it's on an 8 range chart in the British pound. So again, if you haven't updated your charts for the currencies, definitely update them today. So thanks for watching this, and have a great day, and hopefully I get my NT8 issue resolved. I think I know what I got to do. I've got another build for order flows, and I just got to make sure I got the right version of NinjaTrader 8 on my system. So anyway, guys, have a great day, and I'll catch you later. Bye bye.